Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com/subscribe. Let's dive right in. In today's episode, we'll cover a busy week ahead with economic reports and earnings, China's steps to protect its markets, foreign ETFs for diversification, the importance of taking action to avoid financial loss, and insights on the Fed's interest rate decision and job market data.
This week is filled with important events and reports that will have a significant impact on the economy. One key focus is whether the Federal Reserve will cut interest rates in March. The market is divided, with some anticipating a rate cut and others expecting an increase. It will be interesting to see how this unfolds. Investors should pay attention to several economic reports and developments. On Tuesday, we'll have the opportunity to analyze the job openings and labor turnover survey for December. This report provides valuable insights into the state of the labor market, highlighting any imbalances between job demand and supply. Economists predict a decline in job openings to around 71 million. On Wednesday, we'll receive the Employment Cost Index for the fourth quarter. Analysts expect a 1% increase in this quarter, which will be worth monitoring. Also on Wednesday, the Federal Reserve will announce its latest interest rate decision. The general consensus is that rates will remain steady, but it's always worth paying attention to any surprises. Looking ahead, the January jobs report will shed light on the job market. Despite the unemployment rate remaining at 7% experts anticipate a slight increase to 8% in January, along with the addition of 170,000 new jobs. These numbers suggest the labor market may be cooling off at the desired pace. Outside the U.S., there are notable global events. Singapore's central bank recently left its policy unchanged, making it the first quarterly meeting of 2024. Sony is also making an interesting move by investing in an African gaming startup, aiming to expand PlayStation's reach in the continent. Lastly, oil prices rose following drone strikes linked to Iran, resulting in the unfortunate death of 3 U.S. troops. President Biden has vowed retaliation, which could have implications for the energy market. In addition to these economic and global happenings, there are concerns for big pharmaceutical companies. Bristol-Myers Squibb, Merck, and Johnson & Johnson face patent cliffs, which could endanger billions of dollars in sales between now and 2030. This poses significant challenges for these companies. China has been facing some challenges in its markets lately. In an effort to address a major stock market decline that has been ongoing since 2021, the country has implemented restrictions on short selling. This means that shares held by company employees or strategic investors cannot be traded on the stock market for now, but they can still be lent to others for short selling. This move is not new for China, as a similar measure was taken in October, but it did not successfully curtail the sell-off. China has recently made some surprising changes in its markets. Regulators shocked the business world by announcing that the performance of the heads of state-owned companies would be evaluated based on their stock market value. Additionally, the country has plans to open its financial industry to international investors and has decided to reduce the amount of cash that banks are required to hold as reserves, injecting $141 billion into the economy. Rumors have spread that Chinese authorities may order state-owned enterprises to use offshore funds to buy shares worth up to $282 billion. Furthermore, the country intends to merge 3 bad debt asset managers with its largest sovereign wealth fund. Despite these challenges, there is some positive news for the Chinese market. The luxury sector is experiencing a rebound, presenting new opportunities. On a different note, China's property crisis is exemplified by Evergrande, the world's most indebted property developer, which is now heading towards liquidation after failing to reach an agreement with its overseas creditors on debt restructuring. This situation caused a significant drop in China Evergrande's shares. Lastly, it is worth mentioning that India has now surpassed Hong Kong to become the world's 4th largest stock market. Foreign ETFs are a fantastic way to get involved in non-US markets and diversify your investment portfolio. There are several options available to you when it comes to investing in foreign ETFs. One route you can take is choosing a country-specific ETF. This allows you to gain exposure to companies operating within a specific country. For example, the iShares MSCI Germany Index ETF, EWG, tracks the MSCI Germany Index. To invest in these types of ETFs, you will need to open an account with an online broker that offers these services. Another option is to invest in a broad foreign market ETF. These ETFs consist of companies from various markets. A popular example is the iShares MSCI BRIC Index ETF, BKF, which includes securities from Brazil, Russia, India, and China. Currency ETFs are another avenue to explore, although they are considered risky. These ETFs track foreign currencies, and one way to mitigate the risk is to focus on owning a large share in your currency or a currency that is less likely to depreciate. If you are looking to gain access to emerging markets, there are specific ETFs available for that purpose. Examples include the Global X MSCI Colombia ETF, GXG, and the iShares Core MSCI Emerging Markets ETF, IMG. International bond ETFs are also worth considering for a regular flow of income and easy diversification. Yes, you might be surprised, but there are even commodity ETFs available. These can cover various commodities such as coal, solar energy, and more. However, understanding commodity ETFs can be a bit complex. It's important to note that you can also own foreign stocks through US ETFs. Many US-based ETFs, like the Vanguard Total World Stock ETF, hold a mix of American and foreign stocks. However, be aware that the returns may not always be extraordinary. For instance, the Vanguard Total World Stock ETF has had an annualized return of 8.07%, slightly lower than its benchmark of 8.17%. On the other hand, the iShares MSCI ACWI US ETF only owns foreign stocks and has had an annualized return of 3.70%. Even within the US, you can find country-specific ETFs such as the Wisdom Tree Japan Hedged Equity Fund, DXJ, which focuses on the Japanese market and has provided a 9.97% ROI over the past decade. Oh, I love a good quote. Today's quote of the day comes from the brilliant Carrie Wilkerson. She says, "The longer you're not taking action, the more money you're losing." And wow, isn't that the truth? Carrie's quote really highlights the importance of taking action and not letting opportunities slip away. Whether it's starting a new project, pursuing a new job, or even just tackling a task we've been avoiding, putting off action only leads to missed chances and potentially lost income. So, let's take Carrie's advice to heart and make a conscious effort to stop hesitating and start doing. The sooner we take action, the sooner we can reap the rewards and stop losing out on valuable time and opportunities. Remember, every small step forward counts, and it's never too late to start.
In this episode, we covered a busy week ahead with economic reports, earnings from major companies, and potential movement in Bitcoin, along with the impact of global events on the economic outlook, China's measures to protect its markets, the options for diversification through foreign ETFs, and the importance of taking action to avoid financial loss. Thanks for tuning in to the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.